You are welcome to the Business Lens on Rapid TV Abuja. And in the world of business, let's look at some of the hot business trends, starting from the Central Bank of Nigeria has overhauled its cash withdrawal framework, scrapping the one-time monthly special authorization of 5 million naira for individuals and 10 million naira for corporates to be effective January 1st, 2026. Also, Nigeria's planned cryptocurrency tax under the NTAA, taking effect in January 2026, triggers major concerns across the digital asset ecosystem. Next is Nigeria's business climate strengthened in October 2025 as the NESG Stanbic IBTC Business Confidence Index rose to 111.3 points, which went up from 107.9 in September, marking one of the strongest readings since the index was introduced. The next is Nigeria's fiscal outlook for 2026 says the government is projecting 2.06 million barrels per day crude production with a fallback of 1.8 mbpd and an oil price benchmark of $64 per barrel. And in the markets, liquidity rises, but market caps slip with volume and participation edging higher as the total market capitalization fell modestly to around 92.0 trillion naira. We will look at these stories and more. Stay with us. I am Divine Alex, and joining me today are business analysts. I have Daniel Efa. Good morning, Daniel.
Good morning.
And I have Abiola Adekunle.
Good morning.
And we'll also have someone join us shortly, I think in the next 5 minutes, and his name is Ben Awoks, but I would definitely introduce him when he gets here. So moving on, the CBN has overhauled its cash withdrawal framework, scrapping the one-time monthly special authorization of 5 million naira for individuals and 10 million naira for corporates. Effective January 1, 2026, under the new limits, individuals can now withdraw up to 500,000 naira weekly, while corporates can access only 5 million naira, with excess withdrawals attracting 3% and 5% fees respectively. ATM withdrawals are now capped at 100,000 naira daily and 500,000 naira weekly, counting toward total limits. The Apex Bank says the reset is meant to cut the high cost of cash management, to curb money laundering risks and force deeper adoption of digital payments. The circular also mandates banks to file monthly reports on all deposits and withdrawals above the new thresholds, to keep separate accounts for excess withdrawal charges. Government revenue accounts and microfinance institutions are exempt, but diplomatic missions and aid agencies have now lost previous waivers. This aligns with an earlier October directive restricting POS agents to 1.2 million naira daily, while individuals remain capped at 100,000 naira. Part of the CBN's push to tighten the cash environment and strengthen financial integrity. This is new, and I think people have been talking about it. And let me start with you, Daniel. Right, with individuals, now capped at 500,000 naira weekly, and corporates now at 5 million naira weekly, how will this reshape cash-heavy sectors like retail trade, transport, informal manufacturing that still rely heavily on physical currency?
I think that this particular policy should drive the formal sector more, and as in drive the push to move from informal to formal sector more, because the only way to actually reduce or increase cashless policy is to actually make it difficult or make transactions in cash more expensive, right? So, however, the issue is the gaps it will cause, right, or the chaos it will cause, and how the government intends to solve the problem. So, what can it cause, for example, is the fact that there will be more heavy reliance on transactions, digital transactions. I'm happy there is now a new payment system that the NIBSS has created to ensure that I think it's faster, right, and it's a better infrastructure. So if that is the case, right, then it helps in terms of that conversation. Then also we need to, what we currently have is the POS system. That's more like, it's not necessarily a point of, it's point of cash. So I think that we should start having these banks that issue this POS to start giving incentive to their guys or to their operators to start working around how can you transact without having to give anybody cash. So if, for example, someone is trying to, in a market, are trying to make a payment to seller A, right? How can I just give you my card and you can pay seller A without having to give me cash to give seller A? So those are the things that needs to really go. So even if the CBN is doing its part, right, the banks also needs to actually push this policy to the grassroots properly so that people can take advantage of it.
Because
and
I know that most times when you go to the market, there's a particular market I visit, and I know very well that these people do not, like, if you're not there with cash, it becomes a problem. It is a big problem. Even if you're going to buy Heaven and Earth, they know that you're buying something that is really heavy, that's going to get to maybe hundreds of thousands. They will still insist that you do cash. So for people like that, how do we now get them into this?
Such markets are not really much, you know. For me, I feel that the government should just continue what they've been doing. Because we've been around this before. I think then companies were 3 million and individuals 500,000. And if you even look by the value of the currency, companies should no longer be 5 million because the value of the currency has depreciated about, let's say, 300% before since then. So we should be looking at a company like 10 million, the individual like 1 million. You know, so for me, it's not even necessary what they are doing, and this is my reason. Why are people now engaging a whole lot more in doing transfers and in settling digitally than before? Because now it's convenient. If you ask some people, they've not been into the four walls of a bank in 2-3 years, because they don't need to. But there was a time that if you don't visit the bank in 2-3 months, it's as if you are not a Nigerian. So what they should keep doing is the convenience of transactions. As far as the convenience increase, people naturally will leave the inconvenient methods, which is practically for me, if I ever hold notes, usually it's new notes, because I just want to have the pleasure of spending new notes. I'm not saying I spend it, I spray please, so that nobody come and carry me. But just to have the pleasure of spending new notes. But apart from that, I don't need notes for anything. Even a taxi of 1,000, 2,000, I use my I use my bank app to pay. So let them just. I believe they should continue in that path rather than placing restrictions, because that kind of market you go to, they might not change anytime soon. So what you now do is to place the burden on the people that want to buy, because the seller, nothing concerns the seller. If it's 500,000, I'll give my 500,000. However, you get this 500,000 is your business, which is going to be much more expensive than, let's say, getting 50,000. Okay,
so considering the new 3 to 5% excess withdrawal charges and monthly compliance reporting that was instructed by the CBN to banks, do you see banks adjusting their operational cost or passing more pressure down to customers?
They usually pass it to us. I hardly see a company in Nigeria that says, "Oh, we are absorbing this. Our customers nothing to worry about." They usually.
But do you think that there is definitely going to be a way out going forward?
There might be a way out, but it's always tied to something. If, for example, Bank A says, "Okay, we're not going to charge you the extras on this," it's usually a marketing stunt for them to get more clients or to get more accounts. But one way or the other, you pay for it. Is either you pay for it or the dividends pay for it. But the bank will never lose at the end of the day.
And so now that the CBN is even saying you have to report all these transactions above. So there is no way.
So there's no way, they just have to charge it.
Exactly.
Because if you're not charging it, how do you want to explain?
Exactly.
You know.
And you know, we just left the grey list of the FATF. And the whole grey list being in there is just a function of, okay, yes, we are not getting our financial stability right, less of money laundering activities and all. So this will also push that, right? Because then people will not have a need, or people will not want to take cash out of the bank. They'll have to do transactions formally. And now we're also going to a year where taxes is a big thing. So you are not. So if you say you're trying to get my money in cash, they will charge you for it.
What about foreign currencies?
So I think
is there also a limit?
There's already limits on foreign currencies before now. It's already difficult.
I think like 10 grand or something.
It's very difficult to actually.
But 10 grand is a whole lot in Naira.
Some banks even go as far as converting your foreign currencies now.
I know, but 10 grand, for example, is a whole lot.
Yes.
If you're trying to curb money laundering and you're curbing it in Naira, but I can still walk up to the bank and withdraw, let's say, 10K in a month or in a quarter, I think it's still a whole lot. You know, and I also don't know.
But there's also charges on that.
There is, but not as crazy. I also still think, I'm not sure that, I don't know if if you receive, for example, your payments in USD, for example, and everything you do is in USD, is this tax issue? Sorry, I know we're not talking about tax, but is it going to also affect you?
Yeah, it should. It should.
And again, do you think that Nigeria has the capacity to actually transit to, this digital infrastructure capacity to absorb the forced migration to electronic channels?
The PAPSS app, that was launched, the new one, I think they did the transaction in milliseconds between was it bank and
I think we have the capacity.
Yeah, so I think now I think one thing that the CBN also is not doing, and I think that they should do, is I understand the CBN has to be a regulator, so more like a referee. You don't want to take a side or something. I think the CBN should champion the mobile money conversation, right? Because it is key to the real rural areas where informal sector you can't really do anything about it. Than
that will be based on USSD.
Exactly, USSD. Yes, and teach them the security aspect of it. They need to understand, because now we're having a lot of these networks, telecoms that have their mobile money on operation.
And telecoms are everywhere.
Exactly. The CBN needs to champion the conversation, so that, of course, I know there is this conflicting approach. Are they enemies of the banks? But at the end of the day, you're a financial regulator. Your job is just financial stability.
Let all players come in.
Exactly. Let all players be allowed
able to play on a fair playing ground.
At the end of the day, the gain is for the bank if there is financial stability. We now have less informal sector and more formal sector. It's for the benefit of the country.
Okay. So, but beyond cash, regulators are also turning their attention to virtual assets as Nigeria prepares to implement a new tax framework for crypto trading. Now, this is taking us to the next story, where Nigeria's planned cryptocurrency tax under the NTAA, taking effect in January 2026, has triggered major concerns across the digital assets ecosystem. The Act mandates mandatory VASP registration, 7-year KYC data retention, and quarterly reporting of large or suspicious transactions, with non-compliance penalties starting at 10 million naira for the first month and 1 million naira for every subsequent month. Operators warn the rising compliance burden combined with unclear regulatory direction could push the country's over 22 million retail crypto users deeper into peer-to-peer channels where transactions are harder to monitor. Industry leaders say the government risks shrinking the formal market instead of expanding it. Only 2 exchanges, currently have SEC approval in principle, with no fully licensed operators, even as the tax regime begins. So this is now taking me to you, Daniel. What do you think? Because with only 2 exchange holding SEC and AIP and no full license issued, can Nigeria realistically, can we actually get this done?
So I think that what I'm seeing more around the crypto conversation is more of a fear factor, just pushing in fear. So the thing is, I know globally there is this risky approach they view cryptocurrency, or major financial regulators across the world. But I think more often than not, you cannot examine your level of risk if you do not first allow them come in. You need to first behave like a father before behaving like a commander, right? So what I'm basically saying is a commander approach first, and it is not helping, because imagine SEC saying, come, let us see what you're doing, let us license you, let us give you license, and only 2. It speaks 2 volumes. It speaks that the fact that what CBN did last year has not left the minds of these businesses, and it's still feeling like these guys are still coming to threaten us, right? Then you bring up exactly, you bring up a tax law, and it's already looking like reporting 10 million. No, now these businesses already they are in USD form. So 10 million naira is less than $10,000 to them. So it is small in context of what they are doing. So what you should be concerned about first is to first have data of what they are doing. If you don't have data of what they are doing, you can never really set a very good tax system, which is really what we care about primarily. Secondary is the security aspect. Primary is the tax that we want to make from. So why not just take time and understand? Imagine having 22 million users in a space, and you are still giving blanket tax. That means that's almost more than 10% of your people.
That's more than a lot of countries.
Exactly. So you should take time to really understand. In fact, if possible, do surveys with your users. If possible, do stakeholder meetings with your users, not the companies now. The users will give you the information you really need about how their market works. So if this tax policy is coming, and it's already saying that there's a likely people will move to P2P. It is basically what will happen, right? Because if you want to make money off a space and you don't have knowledge of, you don't have access to, you're just practically going to be sacrificing those two companies that have signed up with you.
But what does this mean for our capital inflows and financial intelligence gathering?
So we will keep doing what we've been doing in the sense that there is no crypto that would not come back to fiat, right? One way or the other. At least I know that there is no BTC ATM in any of our malls yet, right? So that is the only way we have right now. And I think that globally, even I think the US SEC has a way it has access to all these things because those companies are regulated.
Yes.
So that should still be what should still be on the front burner.
Okay.
Get these companies to get regulated so they can have access to these things, or else it will still be like this for the longest time.
Okay, so let me come to you, Abiola. Nigeria ranks second globally in crypto adoption.
Yes, so
Does taxing, still is it a still unlicensed industry risk shrinking as we are now second globally?
I don't get the question.
Okay, now does taxing a still unlicensed industry risk shrinking?
Well, the industry itself will not shrink. The mode of operation might deviate or might change because whenever you see that there's a whole lot of stress on formal channels, what happens is a black market is created. Now, black market usually is not for profit gaining, like basically. Everybody wants to gain profit. It's usually for convenience. If you check during the times when we had subsidy in dollars, how many people would walk into a bureau de change, fill forms, and officially get stuff? It will take a whole lot if you are even lucky, because I remember then once they get from CBN, you get there, they say it's finished, it's finished, it's finished. So at the end of the day, you see that the black market being created is not really because of profit gaining alone, but for convenience. So I feel what the government should do first is not to tax an unregulated market. Like Daniel said, let's regulate it first. Let's regulate it first. Bring people in, because the feeling an average Nigerian in this space has is that the government is not here to help me, they are here to take from me. But once we start having that feeling, based on the reassuring practices of the government, that the government actually wants to help us, and in return, we also should pay our taxes, then things will be smoother.
Things will be smoother. Still on policies reshaping the business environment beyond digital assets and tax concerns, fresh economic data now shows how Nigerian businesses are reacting on the ground, and the sentiment appears to be shifting upward. This is taking us to the next story, where Nigeria's business climate strengthened in October 2025 as the NESG Stanbic IBT Business Confidence Index (BCM) rose to 111.3 points, which went up from 107.9 in September, marking one of the strongest readings since the index was introduced. This represents a significant improvement from 76.8 points recorded in October 2024, reflecting easing inflationary pressure and a more stable exchange rate environment. All five major economic sectors remained in expansion, with manufacturing rebounding sharply to 111.3 from 102.5, and trade climbing to 115.4 points. Agriculture also strengthened, rising to 111.4 from 107.3, driven by improved crop production, better input assets, targeted government support. The services sector maintained momentum at 111.0, supported by stable macroeconomic conditions. However, persistent challenges remain, including high input costs, exchange rates pass-through effects, animal disease outbreaks, and raw material shortages, which continue to pressure production costs across value chains. Now, with this information now, what do you make of this, Abiola? Let me start with you now.
It's a good thing that the manufacturing sector is bouncing back, because I've always felt that these are one of the few real sectors that we actually have. In as much as I love banks and what they do, I feel that the banks, to a very large extent, should be a supporting sector. Okay, we shouldn't be looking at the country and the first things you are seeing are banks everywhere. You should be able to see industries, manufacturing, agriculture, then at their back as their support are the banks. But in Nigeria, you see that the front burner is the bank. So it's a good news that manufacturing is bouncing back, and I think if we continue this way, we're on the right trajectory.
Okay, so you think that this, can this optimism withstand ongoing FX and input cost pressures?
I think it can withstand, because I think the major things with in and out of FX, which is very important, have been resolved. So once the in and out of FX has been resolved, it is easier for everybody and anybody in these sectors to actually go and look for FDIs, because you can actually now say, oh, see what the country is doing, see what the country, see the infrastructure, financial infrastructure, not physical ones, and bring some money. Let's go. So I think yes, it can withstand.
Okay, so let me come to you, Daniel. With all 5 sectors in expansion, which industry is best positioned to convert this confidence into measurable output growth in Q1 of 2026?
Good question. I think that when you look at, you have to look at it from which of these industries have been badly affected, because when you look at the confidence index itself, the rise in 2025 is a function of how bad it was in 2024. So now people are feeling, okay, now we've done almost 12 months, stable FX, right? And I think we've done between 1.5 and 1.420 for a whole year. First time in almost how many years since the last time everything went free floating. And for those businesses, you can now say, going into the new year, this is what we are projecting, right? Oil prices notwithstanding, you can't change. That is a macroeconomic you can't control, but the FX, which is government policy driving that, it looks like there is a level of stability. And even if no matter how bad it is next year in terms of interest rate drop, government will still there will still be a very marginal or manageable approach to FX into 2026. So I would think that manufacturing guys should be the ones really enjoying this stability. I also agree because agriculture, for example, I think this is one of the years they've had good numbers in like almost 3, 4, 5 years. They've always doing constant recession in terms of GDP growth. So agriculture is looking at it's bouncing back. Now, this is the thing. We don't know what exactly is causing the bounce back. Now, because now, this period, you can say it is because it is, what's the word? It is harvest time. So if we don't have, yes, you can also say yes, because they do a lot of imported feeds, and we've seen a lot of government intervention in feeds this year. You can say that has also pushed stability in the prices. But the real issues, which has always been the produce, the production, right, the level of production, has not really been we've not improved on it yet. The security issues that we still face in those areas are still there. So that might be one sector that we should look at in going into next year, because yes, business confidence index is more like a sentimental conversation. It's like, what do you guys think? It's not necessarily about what's really happening on the ground. So sometimes it might not necessarily connect to what's happening on the ground.
So
but
do you
people
think this is sustainable?
Yes, it is. If government doesn't stop doing what it is doing, because what we have here in this part of the world, when data comes out, is fantastic. They say, well, we are doing so well, everybody just goes to relax. No, if you are now building real conversion, because this is sentiment, if you now build real value to sentiment, it now becomes more productive for you. So I think that is where government now needs to look at the data, look at the components of what people are saying, then look at the industries or the sectors to really touch on, so that we can have a better index even going into next year.
I wanted to ask concerning this agri thing that I also think that because of technology, we are beginning to see a shift in the manner in which we grow some of our crops, even though it's still very, very little in percentage. But now we're having a whole lot of vertical farming. We're having farming in sacks. We're having all manner of farming that can actually be done in urban areas. So in the coming years, we might actually be, if these security issues persist, we might actually be seeing a shift from traditional farming to all manner of technologically assisted farming or new type of farming within urban centers.
That is a big problem.
It might be a big problem. I'm just saying the reality. These are the things that might happen.
Yes, because
going forward.
Because agriculture is one of the highest employers of labor.
Yes.
Nigeria is a labor-intensive economy. No matter how we look at it, you need the labor to keep them productive. So if you do not put them to, and we have lands. According to data, is like less than 3% of our lands we're using for farming.
Yes.
Of arable space that we have.
Exactly.
So until we are that productive, we are still going to be having a produce issue. We still in fact, now we don't even know the accurate figures of what we even produce.
No, we don't.
So now talking of storage, because storage is what now helps you. Exactly, storage is what helps you even control prices whenever prices are high globally. So those issues are still there. Okay.
We will go on this short break, and when we come back, we'll continue to give you stories that is making the rounds on the business scene. Stay with us. You are welcome back to the Business Lens on Rapid TV. My name is Divine Alex, and diving straight into it, the CBN's new draft guidelines propose one of the most aggressive fraud protection policies yet, mandating banks to conclude app fraud investigations within 14 working days and refund eligible victims within 48 hours. The framework shifts greater liability to financial institutions, especially those that fail to freeze fraudulent proceeds or detect suspicious inflows, and requires institutions to establish dedicated fraud analytics units, early warning systems, and broad approved risk structures. Customers will only qualify for reimbursement if they report fraudulent transfers within 72 hours, show no negligence, and prove they were manipulated into authorizing the payment. Whether neither bank is at fault but the victim is eligible, reimbursement must be shared 50-50 between the sending and the receiving institutions. The rules also mandate 24/7 reporting channels, quarterly fraud awareness campaigns, and strict compliance with the Nigeria Data Protection Act 2023 to increase trust in a digital payments ecosystem now dominated by instant transfers. Our guest is here, Ben Awards. You're welcome to the show. Ben, can you hear me?
I can hear you. Can you hear me?
Ben, can you hear me?
Can you hear me? I can't
Yes.
hear. I can hear you. But can you
Yes,
hear
I
me?
can hear you now. You're welcome. Good morning.
Good morning, Alex.
Okay. So I'm going to be starting with you, right? Does the 48-hour mandatory refund window create new operational or liquidity risks for banks already navigating tight margins and rising compliance costs?
Definitely. I think this is going to help boost trust in the system. It's definitely going to help boost accountability in the system, and it helps the operations of the financial operators to be, more efficient and more security alerts, the security conscious. Sorry, that's the word. 72 hours. It also helps with protecting consumer rights, customers' rights to be specific. So customers now feel that they can trust the system more, and then when they have issues, they can. There's a pathway to solving those issues, and it helps the traditional banks, the traditional financial operators more than even the fintechs, because one of the USPs of fintechs is that when I make a transfer, my transfer, if there's a network issue, I am rest assured that my transfer is going to be reversed to me, within the next 10 minutes, 5 minutes, some of them, from my experience. So it's not like this for traditional banks. Most of the time you have to go to the bank.
So can Nigerian banks realistically meet a 14-day investigation timeline, given the volume of daily transactions and the sophistication of social engineering scams?
It depends. It depends on how good their tech is. I think I'll try to be optimistic.
Okay.
And it also depends on enforcement. If they feel that the regulators are on their backs to ensure that they comply with this, then they will be forced to improve their tech. They will be forced to pay more attention. If it means expanding the units that, are responsible for handling these issues, it means expanding them, improving the tech. You have to do this, because at the end of the day, everybody in the banking system understands that banking is built on trust, more than anything. So if you want your customers to feel like to trust your systems, to trust whatever transactions, trust the viability of whatever transactions they are, carrying out on your system. So I think they can do it. I think they can do it, but I think the regulator has a big role to play here with enforcement.
Okay. So let me come to you, Daniel. How will shared liability between originating and receiving banks reshape interbank cooperation, and could this lead to higher fees or stricter onboarding rules? Especially for customers.
So I think what it would really lead to, the fact that there is a shared responsibility makes it interesting, because I think there are two kinds of worries banks would have. Well, when it comes to the customer, you made a transaction or you were coerced into making a transaction, banks don't really care, right? But what they care about is a transaction that is being monitored by the financial institution, financial crime bodies, and they're all over you, right? So I think for the first time, bank would actually have real financial investigators you get now, because how do you investigate if a financial issue or fraud if you don't have actual financial investigators? And I think that is what this particular policy would drive, because you cannot effectively investigate if you don't have that. And now that it is not just the bank sending or the receiving, it is both parties. It makes more sense, right? So that we have the way crime has really been played out in the country, whether it's from law enforcement, whether it's from kidnapping and all those other vices, is because of this loophole, right, that the CBN is trying to correct. We know, of course, we know it will take time, and but if the enforcement is there, and I think that the CBN is also open channels for the customers, aggrieved customers, should be able to actually make these complaints, and it will be heard faster, so that it will make these investigations and make this enforcement on the banks really fast and effective. I think if that works out, I think yes. But we're talking about additional cost on the banks. That is left to the banks, basically.
Okay. And while consumer protection remains a growing concern in Nigeria's digital finance space, the bigger picture for the economy is now shifting back to fiscal direction, because the federal government has finally provided clarity on the 2026-2028 financial roadmap. Okay, this is taking us to the next story, right? Because the revenue target of 34.33 trillion naira with a projected deficit of 20.1 trillion naira. Now, does the 2026 framework suggest that Nigeria is still heavily dependent on borrowing, or do the assumptions signal realistic fiscal consolidation? Daniel?
Yes, what it looks like is that we are still borrowing over 57 trillion. Our debt stock is still rising, it's rising as if we are not making more money than we were before. Even though you might begin to look at it, dollar term or anything, but making money, because at the end of the day, our fiscal, our budget is in naira. So the borrowing is a bit way complex for me in the sense that we are still doing a lot of the current expenditure borrowing, and that is not what we feel that we should be happening now, right? When the new government, this new government was coming in 2023, the conversation was that there was nothing left in the coffers, and there had to be a subsidy removal that was going to be saving us maybe 4, 5, 6 trillion, right? So the expectation is that there should have been a proper proper fiscal responsibility, right, to have ensured that whatever borrowings we are borrowing should probably be capital-based borrowing, so that we can build infrastructures, expand the economy while we are trying because people suffer this effect of whatever happened, right? So the calculations so far, or the figures so far, have shown that I think we've not really stopped our fiscal responsibility. Now we make more money, we are now borrowing way more, which is really ironic in terms of what Nigerians had to sacrifice for what the government is doing right now. So I think we would see budget is, for me now in Nigeria, is just figures. Again, because how well do we really do budget evaluation? Yes. How often do we do that? We just see a report, 57%, 47%, nothing we're going to do about it, nobody's going to hold anybody accountable. whether you implemented it well or not.
Not.
So that's
Okay,
it.
so let me come to Ben. How credible is the oil production benchmark of 2.06 mbpd, considering Nigeria has struggled to exceed 1.5 mbpd for most of 2024 to 2025?
Thank you for that question, Alex. If you look at 2025, our current OPEC quota is 1.5 billion barrels. And we beat it about 4 months this year. We beat it, I think, in January, February. Can't remember the other months right now. So we've been averaging, 1.49, 1.52, over the year. So don't forget the last budget, we also had a very ambitious plan of 2 million barrels a day. And I looked at the reports on what the Minister for Budget and Planning was projecting. They had two assumptions in terms of production. They had an ambitious assumption of 2.04 million barrels per day, which I think it's achievable, but that would be something that could be achieved, realistically speaking, in a 2-year period. A 1-year period, it looks risky, And he also, the minister also had a more, so what he used, a more realistic ambition of 1.8 million barrels per day, and I think that is achievable in 2026. That is definitely achievable.
Okay.
They just had to reduce some of the bottlenecks and they drive investments.
Okay. So Abiola, does projecting the naira at 1,512 naira per dollar reflect confidence in FX stability, or does it indicate anticipation of further currency pressure ahead of the election year?
I think 1,512 anticipates pressures, because for the past 2 months we've been in 1,450, 1,430 something. So anticipating something higher actually means that you are anticipating some form of pressures.
And I also feel that when it comes to currency, there's this sentiment around it. And if you're saying that there's a likelihood it will be higher, yes, we understand that there will be rate cuts next year, right? And when there's rate cut, definitely there will be a lot of a sort of pressure somehow. But now pushing it in your budgetary expectation or benchmark would give investors a sign of, people would easily speculate. We get sentiment of speculation is faster, right? So they might begin to now feel, okay, but why not just let us hold on to our dollars now and see when it goes up, and we do a sort of rent seeking. So that is where I have issues with that. Every other benchmark was fantastic. I think I like the fact that we are lowering our expectations for crude oil prices by saying $54 per barrel is fantastic, even though I still feel that there is no point taking to 64. You can just zero it at 60, because this year, for example, we have averaged 62.5 or thereabout, right? For what's the word? The crude oil barrels per day, I don't know. This year, we've not kept a trend of a 3 months, of a quarter, right? So we are still struggling with even our OPEC quota right now. So I don't know whatever it is being done.
With the struggle, do you think that
for you to say low, on a lower scale 1.6, on a higher scale 1.8, that means you are practically going to be doing 1.7 for maybe 8 or 9 months in 2026 for you to be able to have that as an average, right? So I don't know where we're going to.
We've not demonstrated capacity. All this I don't know is you are just trying to be humble. We've not demonstrated capacity to be able to, show the world that even at the current quota that we have, that we can actually feel and surpass it. So whatever is left for discussion is for us to see what happens in 2026.
Okay, and now away from that one, let's dive straight into the markets. Now, moderate downturn as all share index, which is the ASI, nears 145K. That's 145,000 as the Nigerian Exchange Limited NGX All Share Index shared about 0.22%, sliding to 143,210.33 points, which is a sign of cautious investor sentiment as markets digest recent macroeconomic headwinds. Also, the liquidity rises, but market cap slips while market-wide activity picked up with volume and participation edging higher. The total market capitalization fell modestly to around 92.0 trillion naira, suggesting investors are repricing equities even as trading remains active. Meanwhile, retail and institutional activity gains traction despite the dip in index value. Trades skewed toward higher volumes and deal counts, indicating renewed interest from both retail and institutional investors, which is a potential sign of accumulation rather than panic selling. Let me start with you, Ben. What does this market situation say about our economy?
There's no cause for an alarm, you know. This is a classic case of investors profit taking. You know, about 2 weeks ago, it was very bloody, very, very bloody. It was all beer. It gradually reduced. Then this week, I think the last 2 days, it has been up about 0.17%. Last week, 1 or 2 days. So investors are generally taking profits, largely because of the CGT. A lot of people have suggested the recent comments, you know, by the US president and all that. You could factor that in, but I think that is to a very smaller degree. Investors want to take out their profits and see what they've realized in the pre-tax reform, pre-2026 tax regime. So then they will return when the tax regime starts, because you have to understand that the CGT, 30% CGT is a huge increase of 10%. And it has, that's going to, if you do the math, that's going to have like a 5-6% effect on what they call the margin of safety when portfolio investors are assessing the market and what are their returns. So it's significant, you know, but what I tell people is they will return. This is not investors losing confidence in the Nigerian economy and moving away. They're just taking their profits for now, moving from, because this is a transition period from an old tax regime to a new tax regime. So they reassess their strategy and come in with a strategy that takes into account the new tax regime, because we're also expecting some further clarifications on that CGT aspect, especially how it would be enforced, you know, and some other little details and intricacies. So it's profit taking. There's no cause for alarm. People don't think that. Investors are not thinking that. For alarm.
All right, thank you so much. What do you have to say about our situation regarding the market?
Okay, so for the update, I think we also heard that the Presidential Tax Reform Committee, Mr. Tawidele also talked about there will be that CGT would not be charged anything preceding 31st. And now I also heard that there will be a relief for anybody that invests their returns from the stock market. So that means that whatever that law was created for is being achieved right now, and people would now. So that's why you see more accumulation happening now, because everybody wants to get a 12-month relief of paying CGT for the next year. So it's going to be interesting times. I think the market should definitely rebound, basically.
Abiola.
What you said. Well, I think at the end of the day, it's a master stroke, and this is where you see the professionalism of some of these sector managers, you know, shine, because some of these things a lot of you didn't think about it, and now it's coming up, and you are seeing the effect immediately. So kudos to them.
Okay, thank you so much, Analyst Abiola. Thank you so much, Daniel Effa, and thank you so much, Ben Awards. And that is it on the Business Lens today. Join us again on Monday at 11 a.m. for another interesting take as we track the markets, the money, and the moves shaping Nigeria's economy. I am Divine Alex. Thanks for watching, and don't forget to stay with Rapid TV. Bye for now.